Welcome back to our series on interpretation and explanation of the Company Income Tax Act. In our last video, we dissected Section 9 of the Companies Income Tax Act, breaking it down by giving literal interpretations, thorough analysis, and practical case studies to simplify the concepts. In today's video, we are diving into sections 10 and 11, and we will be applying the same approach to unravel the intricacies of these tax laws. And we will start by reading the section 10 and 11 verbatim. You can also find the text of sections 10 and 11 in the video description. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos. Section 10. Identification of a company. Every company shall have a tax identification number which shall be displayed by the company on all business transactions with other companies and individuals and on every document, statements, returns, audited accounts, and correspondence with revenue authorities, including the Federal Inland Revenue Service, ministries, and all government agencies. Every person engaged in banking or other financial service in Nigeria shall require all companies to provide their TIN as a precondition for opening a bank account, or in the case of an account already opened within 3 months of the passage of this act, the bank shall require such TIN to be provided by all companies as a precondition for the continued operation of their bank account. Section 11. Charge of tax on interest relating to foreign and agricultural loans and certain reliefs. Interest payable on any foreign loan granted on or after 1st April 1978 shall be exempted from tax as prescribed in Table 1 in the 3rd schedule to this Act. Interest on any loan granted by a bank on or after 1st January 1977 to a company engaged in A. Primary agricultural production, B. Fabrication of any local plant and machinery, or C. Providing working capital for any cottage industry established by the company, shall be exempted from tax provided the moratorium is not less than 12 months and the rate of interest on the loan is not more than the base lending rate at the time the loan was granted, refinanced, or otherwise restructured. For the purpose of subsection 7 of this section, where a bank grants a loan to a company, it shall disclose to the service the following information: the amount of the loan, the moratorium, the date repayment is due to commence, the amount of repayment showing capital and interest, and the full particulars of the recipient of the loan and its permanent address. In this section, primary agricultural production means A. Primary crop production, comprising the production of raw crops of all kinds, but excluding any intermediate or final processing of crops or any other associated manufactured or derivative crop products. B. Primary livestock production, comprising the production of live animals and their direct produce as live or raw meat, live or raw poultry, fresh eggs, and milk of all kinds, but excluding any other associated manufactured or derivative livestock products. C. Primary forestry production, comprising the production of timbers of various kinds such as firewoods, charcoal, uncultivated materials, gathered and other forestry products of all kinds, including seeds and saplings, but excluding the intermediate and final processing of timber and any other manufactured or derivative timber products. D. Primary fishing production, comprising the production of fish of all kinds, including ornamental fish, but excluding any intermediate or final processing of any other manufactured or derivative fish products. Interest payable on any loan granted by a bank on or after 1st April 1980 for the purpose of manufacturing goods for export shall be exempted from tax on the presentation of a certificate issued by the Nigerian Export Promotion Council stating that the level of export specified has been achieved by the company. A company shall be deemed to be engaged in manufacturing for export if the Nigerian Export Promotion Council certify that no less than one half of its manufactured goods disposed of in its year of account is sold outside Nigeria and is not re-exported to Nigeria. Interpretation, analysis, and case studies of 10 and 11, subsection 1 to 3. Identification of a company. Every company in Nigeria must have a tax identification number (TIN) and it must be displayed on all business transactions, documents, and correspondence with the tax authorities. Bank and other financial service providers must ask for a company's TIN before opening a bank account, and if the account is already opened, the company must provide its TIN within 3 months from the date of this law. Charge of tax on interest and certain reliefs. Interest paid on foreign loans taken after 1st April 1978 will not be taxed as prescribed in Table I in the 3rd Schedule of the Act, tax exemption on certain interest. Interest on loans from banks granted after 1st January 1977 to companies involved in agriculture, machinery fabrication, or cottage industry development will also not be taxed provided the loan meets certain conditions. Bank must provide specific information to the tax authority when giving loans to companies. See subsection 3 of the Act. Analysis. Section 10 aims to ensure that every company in Nigeria has a tax identification number which is used to identify and track their financial transactions and dealing with the tax authorities. This is important for transparency and accountability in business operations. Section 11 outlines the tax exemptions on interest payment for certain types of loan. It encourages investment in agriculture, local industry, and foreign borrowing by providing relief from paying taxes on the interest for these loans. It also mandates that banks must disclose specific details about the loans they provide to companies to the relevant tax authority. Case study. Case study 1. Company tax identification number requirement. ABC Limited, a manufacturing company in Nigeria, is required to have a tax identification number as per the law. This means that ABC Limited must obtain a TIN and display it on all their business transactions, documents, and correspondence with the tax authorities. Failure to comply with this requirement may lead to penalties. Case study 2. Tax exemption on foreign loans. XYZ Corporation obtains a foreign loan after 1st April 1978. According to Section 11, subsection 1, XYZ Corporation will not be required to pay taxes on the interest paid on this foreign loan, providing them with financial advantage and potentially encouraging more foreign investment and borrowing. Case study 3. Disclosure of loan details by banks. DEF Bank grants a loan to Element Industries, a company engaged in fabricating local machinery. As per Section 11, subsection 3, DEF Bank is required to disclose specific information about this loan to the tax authorities, ensuring transparency and accountability in lending practices. This helps the tax authorities monitor potential tax exemptions on the interest from such loans and prevents misuse of tax relief. Interpretation, analysis, and case studies of Section 11, subsection 4 and 5. Literal interpretation. Primary agricultural production includes growing raw crops without processing them, such as fruits, vegetables, grains, and other raw agricultural products. It also includes raising live animals for their meat, eggs, or milk without processing them into other products like cheese or yogurt. Primary forestry production involves gathering materials like firewood and seeds from forest but does not include processing timber into finished products. Primary fishing production involves catching fish, including those used as pets, without processing them into other products like canned fish or fish oil. If a company takes a loan from a bank after 1st April 1980 to make products for export, they won't have to pay taxes on the interest for the loan if they can show a certificate from the Nigeria Export Promotion Council saying they have met the specified level of exports. The company will be considered to be manufacturing for export if at least half of the goods they sold in the year were sold outside Nigeria and were not then brought back to be sold in Nigeria. Analysis. The provided section outlines the definition of primary agricultural production and exempted interest on export loans. The definition of primary agricultural production clarifies that it covers raw crop production, live animal production, forestry production, and fishing production, while excluding the processing of these raw materials into manufactured or derivative products. This definition provides clarity on what activities are included in the scope of primary agricultural production for tax purposes. On the other hand, the exemption on interest payable for export loans aims to incentivize companies engaged in manufacturing goods for export by exempting them from paying taxes on the interest for loans used for this purpose. The condition for availing this exemption requires the company to present a certificate from the Nigerian Export Promotion Council demonstrating that the specified level of export has been achieved. Additionally, the company must meet a criteria where at least half of its manufactured goods sold in a year are sold outside Nigeria and are not re-exported back into Nigeria. Case studies to simplify. Case study 1. A small-scale farmer in Nigeria grows various crops such as yams, maize, and vegetables. According to the tax law, the farmer activities fall under primary agricultural production because they are focused on growing raw crops without processing them. This means that the farmer's income from selling these raw crops would be considered under the rules for primary agricultural production. Case study 2. Exemption for export loans. ABC Manufacturing Limited is a company in Nigeria that produces textiles for export. In 2021, they took a loan from a bank to expand their manufacturing capacity for exporting goods. As per the law, if ABC Manufacturing Limited can show that they meet the export requirements and have a certificate from the Nigerian Export Promotion Council, they would be exempted from paying taxes on the interest for the loan. This exemption is intended to encourage more companies to focus on exporting goods and contribute to the country's economy. In summary, Section 10 mandates the acquisition and display of tax identification number (TIN) by companies in order to ensure transparency and accountability in financial transactions. As for Section 11, it provides exemptions for interest payment on certain loans, incentivizing investment in agriculture, local industry, and export-oriented manufacturing. Through the interpretation, analysis, and case studies, we have elucidated the practical implication of this Section 10 and 11, offering clarity on compliance requirements and tax reliefs. Thanks for joining us for this episode. Don't forget to check out the previous episodes where we have covered other sections of the Companies Income Tax Act. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video beneficial, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.